As we approach the middle of the second month, we already see global trends that seem to be shaping 2025. These are not in any way judgments, nor is one endorsing these factors. Rather, these are observations that can help in understanding recent developments, especially in the business world, and knowing what to expect and how to respond depending on the context. Hello, this is Bode Oshosami on Global Business Insights, where we look closer at the main business headlines. In Nigeria, lawmakers approved 54.99 trillion naira in government spending this year in a revised budget, raising spending by 9%. President Tinubu also met with Sundar Pichai, the CEO of Alphabet, in France to discuss a strategic partnership which will advance Nigeria's role in artificial intelligence and digital innovation. Tinubu is proving to be the most business-friendly leader Nigeria has had as he progresses critical reforms and business alliances. Tinubu says he is exploring partnership opportunities with Google, focusing on enhancing scalable cloud infrastructure, equipping the workforce with essential skills, promoting AI innovation and research, driving cloud adoption, and elevating Nigeria's standing in the global technology landscape as a hub for innovation and AI transition. Singapore's GDP expanded by 4.4% in 2024, also the fastest print since 2021, and after expanding 1.8% in 2023. In Q4, gross domestic product grew 5% year on year, also higher than the 4.7% forecasted. In the US, the major indexes closed higher yesterday as new inflation data and updates on US tariff plans allayed concerns around inflation and trade. President Donald Trump signed a memorandum to examine reciprocal tariffs on foreign nations, but added that tariffs would not be implemented immediately. Instead, the administration will study trade imbalances and later decide on which countries' imports should be subject to which tax rates. Donald Trump today kicked off a joint press conference with Narendra Modi by jointly announcing a framework to strengthen ties even further economically. This will include increasing military sales to India by many billions of dollars. In the US, we got the producer price index data yesterday, also termed wholesale or factory gate inflation, increasing by 0.4% on the month, slightly higher than 0.3% expected. If we exclude food and energy, the core PPI was up 0.3% in line with the forecast. The January wholesale inflation data confirms a hot start to the year on inflation, after Wednesday morning's higher than expected consumer price index print. In other economic news yesterday, the U.S. Labor Department reported that initial filings for unemployment claims changed little for the week ended February 8. Claims totaled 213,000, a decrease of 7,000 from the prior period, and also slightly below expectations. In the UK, barely escaping an economic contraction in Q4 gives a fleeting reprieve to Chancellor Reeves, who is now left with little alternative to presenting another politically painful fiscal correction in her spring statement on March 26. Of late, she has been pushing to recover the trust of the corporate sector, who were alienated in her autumn budget with a £25 billion increase in employers' national insurance contributions. She hopes to win the business community back by embarking on a deregulation drive and pro-growth agenda. To our main story, already in the early months of the year, we are observing many factors that are of increasing interest shaping the year, especially on the business front. These include global peace coming at a cost, a new normal of sticky inflation, the war on waste at all fronts, especially the public sector, rise of the BRICS and its alliance. The momentum seems to be picking up there, and a new intelligent age that could be a major game changer. We take these issues or these factors one by one. War rages often because the cost of peace is too heavy, but of late, far too many wars means millions of lives are lost, plus the cost of reconstruction of vast devastation is mounting to an unsustainable situation. Now there is a new sheriff. The strong man hopes to succeed in doing what the institutions could not achieve without the help of a stronger class monitor. The world wants peace, but will not always like the costs. Whether in the Middle East, Ukraine, Russia, there will be costs that will come after negotiations. The fairness on how costs are borne and how expensive concessions will be perceived will be a matter of perspective. The trend of peace, but at a heavy cost, means more spend on infrastructure reconstruction as entire cities are rebuilt. There's also a peace dividend from an economic perspective as commodity prices like oil see a lower risk premium. On inflation, the picture seems to be less clear. The trend is lower inflation indeed, but we are seeing some stickiness in underlying core inflation. In the US, we just saw CPI climb again to a 6-month high. New reciprocal tariffs will eventually come and take its toll. The Bank of England warned that higher costs of energy from gas means short-term pressures. Most jurisdictions now expect inflation not to come down to what is their normal levels until at best 2026. Corporations have no choice but to find new ways of shaving costs. This means in many cases rethinking completely how and where they operate and comprehensive remodeling to be more inflation proof. New digital innovation is targeted to get costs down. New skills are needed. All the new costs for higher paid staff and technology will be, of course, partially offset by massive layoffs. Those flexible to reskill and retool themselves will have the edge as companies invest in getting more from staff in a vastly different environment where new tools are increasingly available to revolutionize productivity. Countries that provide less costly and easier, more competitive business environment will have a strong edge in the ongoing recalibration of trade and reconfiguring of supply chains. The war on waste is not a new war. The concept of zero waste has spurred new business models to get significantly higher value from fewer resources. Assets now have extended life cycles and will serve more people at less cost with advancements in recycling models, sharing and renting, as opposed to traditional legacy ownership models, increasing reusability and efficiency in extending the overall life cycle of materials. Almost every aspect of life, vehicles are more about mobility and convenience rather than ownership. Many routinely share accommodations. Cloud computing is a new norm that has radically transformed productivity in information technology assimilation. But the public sector has tended to lag behind, as COVID and other major public challenges led to sharper growth in size of government and eventually in inefficiencies in governance. The result from bigger government in a challenged geopolitical environment was larger deficits and higher debts, and the intense demand for support and aid to poorer countries, and less attention to waste, plus opportunities for corruption given the weaker oversight. It's not difficult to see how many would have taken advantage. Some argue that higher debts and bigger governments are justified. Others will be calling it a swamp and selling a different paradigm, drawing attention to a quicksand of waste. The war on waste has caught on in the public sector and will force new models in public sector service delivery as other countries copy the US Department of Government Efficiency DOGE initiative as an opportunity to transform and get more efficient digital enablement and better value for taxpayers' funds continues to drive a lot of these initiatives. The trend of rising BRICS and its alliance has been on for a while. What is different today is the much faster momentum. The dramatic effect of the breakthrough in AI by Chinese startup DeepSeek is but another of many signals that the shift in competitive edge no more favors the West. Market size, market growth, innovation and patents, and assimilation of latest digital technologies increasingly favor China and the rising East, while a divided West all of a sudden looks lumbered with old post-war structures that served well in the 20th century but no more fit for purpose. I can't say we fully understand the acceleration in development of the BRICS alliance and to what extent a more slothful Western alliance overregulated itself into an economic coma. The rise of BRICS alliance is an opportunity for continents like Africa with so much yet to be tapped potential, less developed nations that will prove they can play well on the global scene and can get a fairer share of the global trade pie as productivity improves. Africa must embrace a renaissance in revolutionizing its structures, and it can't be business as usual. Countries like Nigeria must boldly correct wasteful corruption, high inflation and insecurity to be able to exploit an opportunity to leapfrog with new technologies and demographic advantages. A rising BRICS alliance will still need to deal with the poor record in human rights, gaps in governance, corporate ethics issues, and less participative and accountable democratic political structures. The jury is still out on whether these structures are sustainable and how much will change or to what extent these issues will pull back these rising regions. Meanwhile, China's TikTok is now available on the US app stores of Apple and Google after the US postponed enforcement of a ban until April. More than 170 million Americans may be already addicted to the app, and DeepSeek is shaking US markets. Apple and rivals in the Chinese smartphone market are in a heated race to adopt the fast improving AI models, including those from DeepSeek and Alibaba Group Holding, and markets are paying attention. Finally, a new intelligent age changes the game. The issue of trust and higher costs may have held back faster AI advancements in the new digital age, but not for long, as we are getting breakthroughs in mass market AI, and corporates now seem to understand the need to move faster in this space. According to Accenture, in their vision on technology in 2025, business leaders are preparing today for an imminent world in which AI is everywhere and acting autonomously on behalf of people. Quoting their survey, new autonomy for AI also means new autonomy for systems and people, and a refined relationship with trust. The study adds that opportunities will be lost unless business leaders secure enough trust from employees and consumers to engage with AI's unprecedented capabilities. Lower costs and pressures to be more productive is driving a faster assimilation of these new technologies. Market leader Nvidia's shares was up over 3% yesterday as signs of high demand for artificial intelligence infrastructure continue to support the stock. Global shipments of AI servers in 2025 will grow by nearly 30% year over year. Though a slowdown from a 46% increase in 2024, this is still evidence that this growth area is far from abating. Let us know what you think and if you see other trends, and I look forward to your comments. Asia Pacific markets are mostly higher, apparently tracking Wall Street gains overnight as President Donald Trump signed reciprocal tariff plans, which delay imposing levies till after a study on trade imbalances. Well, that's all we can take on this episode of Global Business Insights. You can watch us on Business Day TV YouTube channel Monday to Friday at 11 a.m. West African time. Thanks for watching. This is Bode Oshosami. Bye-bye.